All right, everyone, welcome back for the episode of Carnivore Trades. Today is Thursday, April 11th, 2024. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it today. So, market today, a little bit of a gap and crap in the morning. And we actually went down to double bottom. And then we had a pretty good rally, really off double bottom. Started off kind of inconspicuous. We kind of just got a little bit of a bid, chopped around. Then you can see they kind of turned those buy algos on. You had kind of a tight like bull flag there intraday, and then we just kind of started to bid up. And this is kind of what I'm talking about. So one of the things that I talked about yesterday in terms of panning effects. So, like, what were the winners again today? Look at NVIDIA. We talked about that yesterday. Pretty much V-shaping. Even when the market was down, this was holding up. The semis were holding up. You had stocks like Palantir Green, Meta, Amazon. New all-time high for Amazon, by the way. So, a lot of the similar stocks. ARM up 4%. SMCI Green today, up 2%. A lot of the same stocks that I talked about yesterday. So it's that kind of AI effect. SMH Green here. You see the Russell 2000 struggling a little bit, although it's holding that trend line we talked about yesterday, which we'll get into in a second. But that kind of penning effect is still in play, right? So we're still kind of just, earlier we were kind of just into that 5150 area. It's 40 minutes to the close right now. Guess where we are? Yep. Hello, darkness, my old friend, right? 5,200. So if you get rid of this, and if you get rid of this outlier where we gapped up before that mega sell last week, exactly 1 week ago, you can see we've just been really right in this tight range. So this is what I mean when I say penning effects, 5150 to 5,200 area. And I think that's going to remain a theme here. I still think that, yes, dips are being bought, but they're still selling a little bit into that. And you can see the lower high effect here. These dips, they're being bought, but it's kind of resulting in lower highs here and lower lows so far. So I still think we're seeing some distribution. I do think that we do have an interim top in place still, but I don't think we're going to see any sort of really realized downside until probably sometime next week. You can see we're back inside of that wedge now there on the ES. We probably go up, and I wouldn't rule it out tomorrow. We go up and touch that upper trend line. So, again, market kind of just in a range here. I do think the market wants to go down right now. But again, as we get closer to that expiry, we're seeing those effects, those buyback effects really start to affect the market here. And again, that's why you kind of had this inconspicuous type move here. It was not really a V shape. You could argue a little bit at first, but it kind of just floated higher until we really broke that resistance. So again, pinning effects, right? Certain stocks being used to prop up the market while other areas sell, and kind of a buyback effect from dealers as we get closer to expiry. I think that's kind of what's in play right now, and that is the reason for it. Take a look at bonds today, right? If we look at the 2-year, it's bouncing like I predicted it would, but it's not really we got the pop off of PPI this morning, but since then, what have we done? We've just kind of gone sideways, right? Compared to the SPX or the Qs or anything really, which we've kind of, if we go to the ES, you can see, we popped up here on the ES, we faded back, but then we kind of V-shaped. So it's not like bonds are giving the massive green light here. Again, it just appears to be a mechanical effect in the market. And another thing, like I predicted yesterday, is that I would assume that they're hedged, right? So yesterday they clearly were not hedged, right? We look at the ES, the E-mini, that's a sign that the market was offsides, right? Last several CPI, PPI dates have been nothing burger. So eventually, like I said, it's a boy who cried wolf in reverse type effect where it's like, oh, you know what? We're never going to sell off on CPI. What's the point of hedging? And then this is what happens, and you get those put sellers to get wiped out. Today, they weren't going to let that happen again. And you're seeing those hedges come off immediately. PPI, it was mixed to cooler, I would say. It wasn't like super cold. It wasn't super hot. It was kind of Goldilocks-ish. I would say it's slightly maybe on the cooler side, which helped the market. But then even the bond auction today, 30-year auction, there was a tail on it. And you're going to see that's all it did. Little dip there. Why? It was priced in, right? Look at the beatdown the last day or so, right? So you had to kind of figure, and even the last week or two, it's been taking a hit. You're also kind of coming into this level here. This is the ZB. Those of you who follow the TLT, kind of the same setup pretty much, right into this little pivot area. So it was likely to get a bounce, and then you're kind of seeing that secondary bid. What time did we start to take off in the market? Right at 1 o'clock, right? The auction wasn't a disaster. It wasn't great, but it wasn't a disaster. So equity hedges come off, and that gives you the catalyst for a rally. So that is really the long and short of what happened today. We'd have a big bid in Apple too. So I don't know if Buffett's done selling or we just saw some. I know a lot of short-dated calls to hit the tape on certain individual tickers today. Again, that's common around, when you see pinning effects, SMCI, Micron being one of those that I saw that on. Not so sure about Apple, but I mean, definitely some type of a squeeze here. I don't know if it's gamma or what. Haven't been paying that much attention to it, but maybe you can go up and test the 50 MA right now. I'd also be careful with this too. This could be a one-day wonder here for Apple. I've seen this type of price action before in it. Again, just speculating here, but I would give it the upside bias to the 50 MA right now. At least as far as tomorrow is concerned. But in any case, again, I still think this market here is kind of pinned. By the way, look at where we are. That blue trend line. And we're kind of sitting right there towards the end of the day. So I expect that to get hit. If not by the end of the day today, then by tomorrow. But again, bottom line, nothing's changed here at all. So long as we're inside of that red. And honestly, for bears, you're starting to, if we do get a catalyst to move down, this 50 moving average, I know everybody's going to look at it, but it's going to become more minor. The more we just sit above it and go sideways, the more energy we're building, the more compression that we're building in order to break through that. Similarly, if you look at this previous high right here, what did we do for about 2 weeks before that? All right, we compressed beneath it, and it was able to get through pretty easily. If we had gone, say, straight up into it without consolidating, it likely would have resulted in more of a steep pullback. But that's just kind of how markets tend to work here. But in any case, this is still support right now, 5100, 50 MA. The longer we go sideways, the weaker it can get, though. But markets are holding up right now, and we'll leave it at that here. We'll see what we get tomorrow. With Friday's close, the triple Qs were the strongest today, up 1.75, essentially retracing. I retraced all of the CPI move. So if we take a look here, there you go. So we're actually above it. So we had the initial, this wasn't even the reaction, this was just before the CPI. I don't know what was going on there, trying to fake people out or what. But they took it down pretty hard, and now we're above that. So Q's in a little bit better shape here than the spiders, although that's kind of a departure from what we've seen recently, specifically in the semiconductor sector, putting in a high before everything else and still being below this trend line here. Although right now it seems the semis are, at least certain select semis, specifically AI names, are being used to kind of keep the market propped up while other areas are weaker. Anyway, Russell 2000 bouncing off our trend line again, short term 205, and then gap fill are your next resistance levels, but that is holding right now, and that trend line is still acting as support. The diamond here actually had a pretty big dip. That's been the weakest of the four lately. Notice how it took yesterday's lows out. It did come back, but it's barely even up. It's not even really above the highs from yesterday, as of right now. I mean, it's tested the highs, but it's not really, showing anything robust here. Pretty good slice, and good slice on the weekly, and 20-week moving average is holding for now. Again, we have a gap fill up here, and then your big level is around 392.50. On the diamond semis, we already covered here. We'll watch 230 and that red bar high tomorrow, if it can get up there. IGV, same thing. So this trend line remains resistance, as does this and this, if it gets there. Transport's good bounce back after the slice yesterday. Weekly chart still good. Closing above yesterday's high. Could get us a little bit of a squeeze up. Maybe even up. Well, obviously 16K would be your next level, and then back up to 16.2 there in the short term, but transports still look okay, and they have been very tight here for a while. When this breaks, it's going to break in a big way. All right, so transport's holding up. Let's flip over here to rates. So again, I kind of talked about this already. Sorry, just flipping over here. All right, yeah, so 2-year. I talked about the possibility of a little bit backing off, and it did, right? So we hit this pivot, stalled out, and we're pulling back off of that 5 handle. So that's really all it needs to be right now. If this consolidates and goes sideways, it can go through that and go higher. So that's the key right now. But it did back off. You see the 5s, 10s, and 30s also backing off, but all green, right? So the short end a little bit weaker here, long end a little bit tighter. I still think yields maybe need to do a little bit more backing and filling, and then they can have another push. But I do think that the 30-year gets up to 4.75. I do think it does get there. So yield still holding up, but stalling out as expected. Again, I think yesterday, or I think today was definitely priced in, and you're seeing that reflecting right now in the charts. XHB effectively kissing the 50 moving average, not quite. We'll just say it did. So up 49 cents right now. Nothing terrible. You know, if we get above yesterday's high, it could go back up to gap fill. But again, we did some damage yesterday for the first time in a while. So who knows? Maybe it goes sideways here and sets up a bear pattern just like it did previously up here. So XHB a little bit weaker. BNQ recovering. Got to get above this white trend line tomorrow, though. So that's going to be, I think, contingent on bonds. So if bonds can get another bid and yields pull back a little bit, then they could save this for tomorrow. But this is on the edge right now. XLF touching the 50, actually touching the 50 today, and getting a pretty good bounce. Lots of earnings tomorrow. JPM, I think BlackRock, and I think Citi, if I'm not mistaken. Let me double check. I know there's more than that, but yeah, Citi, BlackRock, Wells, and JPM. And then I think Goldman is next week. Goldman, Schwab on Monday, and then we got Bank of America, Morgan Stanley on Tuesday, PNC. At least I believe that's what it is. So, but anyway, we'll watch those bank earnings tomorrow. They've been really strong. JPM still not confirming that head and shoulders. Look at this. So, like, you have this head and shoulder pattern. We have not really triggered it yet. Technically, I guess you have on a 4-hour, but not on a daily, because we've never closed below it. So it still could trigger tomorrow. We'll see. But XLF holding up. Good bounce off the 50 MA. We'll just go back to... we have gap fill and then 41.70 for resistance. KRE touching the 200. This chart's still in a lot of trouble, though. Do not like that weekly. It's hanging on. KBE, I like the weekly. That's hanging on as well, as long as it's above this. The broker dealers here, little dip, but came back. They did close below that green bar, though. So just be aware of that. Came down and tagged 590. We'll see what it does here. This might be a little bit more of an interim top, though, too. Oil. So oil just been kind of range bound here. It looks like it may just be basing for one more pop. Again, 20 MA coming in, catching up to price. Spacing now increasing between the moving averages. So the trend is now up on the daily for oil. And yeah, I'm going to give it the upside bias to 90. And then I think that this run here is about done. XLE, pretty good dip. Little like kind of test candle. And it came back off the lows. It is trying to consolidate for a move higher. The one thing I'll just say is that when you have a big run here and then you try to flag at the end of it, a lot of the time it can fail when you're at an extreme high. So we kind of are at an extreme high on the daily. The weekly, not really so much. We've put in a long base here. Same thing with the monthly. But we are kind of coming into basically all-time highs here too. So we'll see if that factors in. But XLE holding up, XOP holding up, and OIH holding up as well. Again, maybe they have one more little pop left in them if oil continues higher. But we'll see about that. They're just kind of flagging right now. CCJ, nice little pop here. Again, we never closed below that green, kept the inside bar, and it kept going. So you have a little resistance here with this triple top, but you've consolidated beneath it. So I would say it can go through it if it wants to. So uranium's still looking good. URNM still has not made new highs. It's still holding up. Pattern is still good. And URNJ, same kind of deal. So pattern's still good, but Now CCJ has returned to become the leader. Nat gas slipping lower here. So back below this trend line. If we look at, been using the K lately. It's kind of into that previous area where we broke back above. So we'll see if it bounces off of here. But definitely a weaker showing. I think inventory build was higher today. Yeah, it was an inventory day. So we're now into this level. But definitely a weaker showing there for nat gas. Be interested too if it does spike this low one more time. I think it does get pretty attractive again, but definitely on the weaker side here. Anyway, dollar index. So that got up to about, I just drew this line in earlier, got up to about 105.50. We talked about these pivots, right? And it pulled back. Again, I said this yesterday, like dollar yields a little overbought here short term going into resistance. So probably needs to back off if it wants to go higher. But the dollar, on the weekly, still pretty good. That still looks really good. And dollar yen, they did not really do much in terms of backing this off. I mean, it was flat to lower earlier and it came right back. So hello, BOJ. See if they do something. Gold. Again, I'm going to give that the upside bias of 24. That's not a short. That's just an upside objective. A lot of people are saying gold's overbought. It has to pull back. Turn this into a 10-minute chart, intraday 10-minute chart. Would you say it's overbought now? Assume these are 10-minute candles, right? 5-minute candles. Would you say that this is overbought? So you got to like zoom out, use those bigger time frames. So I don't think it's necessary. I mean, I'm not saying it can't pull back. It is overbought on the daily, but the monthly, more dominant time frame, not overbought at all. It just broke out, like literally just broke out of a 13-year base. Silver, no new highs here. I'm kind of in the camp. I think this wants to go to 30, but again, still some resistance here at 28.50-ish, and that's kind of where we are. So that's holding up. Platinum reversing from yesterday. Again, I'd like to see that flag a little bit more and let that 20 MA catch up. But decent price action. Palladium just backing off as well. But that chart still looks okay. And copper backing off here. This one was a little overbought here on the daily. And we went into that little double tap there and not pulling back. All right, so again, Bitcoin, nothing really doing here. So we're kind of just flirting around with this upper wedge trend line right now. We broke above it, broke back below, and now we're back above it. Big picture, it's still fine. It's consolidating on the weekly. No real problems here. Even if you made a lower low here, it still wouldn't really damage the weekly chart. So it's got plenty of space here. It's got plenty of room for error. All right, so again, lots of pinning effects going on. I'm just trying to think of like what tomorrow would look like. I wonder if we're going to close at 5,200 again tomorrow if we just chop around. But either way, again, I don't think the market's going to really do a ton until next week. I still think that we'll see some good dip buys. We'll also see some pretty good slices, I think, over the next week. But I'm kind of more in the camp that we stay neutral here for the most part. And then I think some risk could come into the marketplace here. Once those buyback effects leave the market and you get that kind of OPEX pinning out of the way, we keep getting this crappy macro data, bad inflation data, that could possibly weigh in on the market and cause maybe a real correction for once. I don't think it's going to be a massive one, but I think it could be something that's worth trading anyway. So anyways, guys, going to wrap it up here. You guys take care. Come find me on carnivoretrades.com. I'll see you guys all tomorrow.